Netflix is a great example of what people were looking for today. It's because, hey everybody, in today's video, we're going to go through top 10 stocks to buy next week. As always, subscribe to the channel, click all notifications because what we go over here is very timely. Stay to the end because I'm going to show you how you can determine whether or not this market is actually going to flip. I'm going to give you something that's pretty much the highest correlation on the indexes and the indicators. So right here at Netflix. Now, if you've been following us for some time, all week we've been talking about the stock after earnings, possibly anything good could move it up. That's pretty much what happened. We've been in this the entire time. I've actually been in a position with it where I actually bought the stock and then married a put to it and was able to get up and in enough before earnings. I made about 10 points to put a put behind it and then actually have a free trade. So I am going to do a video on that. So make sure you comment on what I just said there, because I'm also interested in what you guys think and girls think that I should have for more content. I'm leaning towards more educational, evergreen kind of content again in my head, but I'm interested in the topics that you may come up with. Now, if you take a look at this, broke out, right? Pure bonk level, right? Right on the 200-day moving average, boom, boom, flips and goes. Everybody's looking at this and saying, well, that's probably it. I, quote, missed it. I don't think you missed it. I'm going to explain why. One, you have a huge gap here. And if you ever want to see how big a gap is, just go to volume by price, put that in, and then just take a look at the range and what's going on there. And you can clearly see there is absolutely no volume in there. It's a great way to just see where you might run into a resistance point. You can see that there's literally zero. So that's what we want to see. We want to see these kinds of things. But what people are buying is they're buying growth that just came out with earnings, and they're buying that stability that they don't have to worry about the earnings call. We're going to go through some oil names here that are setting up and one that's setting up similar to this. So that's what they're looking for. So to gap fill here and then figure out what they're going to do, that's a completely different story. Now, I already went through the earnings and how the earnings beat and how it was an upside surprise. So I plan on trying to hold this after this 333, but it's just been a great trader. We had another easy 10 points. I think we pulled out of it today and then some options. And I'm still in the trade. Caveat, I haven't really moved any of it. And I just think that it has a lot of potential here. So keep this one on your plate and do take a look at this on a longer time frame. Now, we're just starting and we're not done the month. And I understand that. But this is a bear flag. If you break the bear flag, technically you go to the top of the flagpole. That puts you at 396. Now, we're certainly not out of the woods yet because we've had a good day, bad day, and we're going to get into that in the indexes. But I want to talk about American Express. This was a really very bad quarter, and it went right to a key level here on the 20-day and the 10, and then you just stopped. And I think that's important, right? We did another video before where are the bulls or are the bears in charge, right? Historically, if you are on the bear side below and the bull side above, you'll do better. You can back test it if you like. But what you're going to see here, I have this long wick. Okay, so we know that this wick means what? This wick means that we have buyers that stepped up, right? Wicks are what? Price rejection. Now, all I'm saying is if you take out this closing price and you start filling in this gap, it's very possible that this trades back down. Right? There are financial names out there that look amazing, and we're going to get into a couple in here. But something like American Express, when they come out and increase their loss provisions because people are not going to be able to pay their bills by 40% greater than what we estimated, right? They were supposed to put something like, I think it was 500 million on the side. They put something like 700 or 800 million on the side. It's a big, big number for them to just write off. And if they're thinking that way, maybe they know something we don't. So I would watch this. I also think it's very telling that you were unable to even get above the opening price, which means that there was obviously pressure there. Now, this is what I'm talking about with upside surprises. So you had earnings come out and the earnings were good and they were very clear. If they can figure out the China implications, they're actually raising revenue and earnings guidance. So we saw some problems earlier with AMAT. Right? And AMAT coming out and saying they're going to have a little bit of a tough time here. They pre-announced. It's not really what you wanted to see. And we thought it was the beginning of all of them. Or let me rephrase that. I thought it may be the beginning, especially with what was happening in Russia. Well, Lam Research basically says not so fast. and all of a sudden you're starting to break above it. Why is this in now? Well, you are above the 20-day for the first time since the cross. So all the people that were doing this particular trade are now going to wind up having to cover should this continue. Look at how the volume's increasing. Okay, out of bottoms, and we don't know if we bottomed yet. We're going to discuss it in a little bit. You get new leaders. You'll get new semiconductor leaders. It will not be Nvidia. Nvidia setting up, and we're going to go through that in a moment. But that's not going to be your next big tech semi leader. I can't be any clearer. I'm hyphenating it on purpose. It will be something that we just don't know yet. Could it be something in the equipment space? It could. Now, also ASML, they had a great quarter. And all we've seen is constant buying. We're back above that 20. We've been here before to this party and it didn't end well. So we want to watch that. But if you take a look at the difference, look at the difference in buying volume down here that day when we broke above the 20 versus where you're at now, right? You have an increasing 20 SMA, I always use the 20, and you're breaking out again. So you could flip to that 475. If you flip 475, you're probably going back up to here and retesting that. You can see this kind of push, and I'm going to explain it in a couple minutes here as to why you could. FAS is very interesting. Why? Because XLF. XL, that's the 3X bull fund. Now, if you take a look at XLF, what's pertinent about this one, you have never in 50 years had a bottom of a stock market without financials or semis being the leader. So if semis are not going to be the leader, and let's just say they're not, we're not sure yet, well, financials are certainly acting like something's going on, right? They're moving like tech stocks. Look at JP Morgan. JP Morgan just moved $22 in 2 weeks. 20% move in JP Morgan. Obviously, they know something's going on. Goldman all of a sudden breaking out, nice little cross here, pushing, trying to get back through the 200. The problem is you don't know which one's which, right? Which one's going to make it, which one's not going to make it. So what we're going to see now is we're going to see this level hold, and then we're going to see if it can push up. As long as you're holding this 31, you want to be on the long side. As long as you're holding that 31, remember, here you are before the great financial crisis. Here you are before the pandemic. This was your level, right? Now look at where you are. And we'll get better charts and more monthly charts in a little over a week. But see where I'm going with this? So when you see these kinds of moves, you want to pay attention. Volume could be better, but this particular one looks to me like it's ready to break out. I'm not a huge anchor VWAP guy, but you see this right here, when you break down and take out these lows, that does become a place of interest. I do want to see the people that averaged from here on, I do want to see them up before I get involved, right? And they are after coming back down. It's rare you're going to come back down and then come back up and then come down again. So I like this. Some pretty key levels here, and this can push. I mean, this can. If you start taking a look at where it was just about 60 days ago, it has that potential. And we can walk you through how you're going to get there in a couple minutes here. But SLB, this came out with earnings. Everybody will say, it's over, I missed it. Look, if a market's going to turn and these types of stocks, the ones that are actually with the equipment, with the tools, if they're going to start moving, then you need to pay attention. And it doesn't mean I'm chasing it today. There are people in the trading community, in our trading community that did, and they actually have been in it all week and they did exceptionally well. I was not one of them. They had a great week on it. They're probably up, $6 or $7, 20%. But I think if you look at this on the weekly and how you're setting up here. Now look at this on the monthly. Okay, so you are setting up here really nicely. And this can push. You can get to that 65 level. So don't rule it out. It doesn't mean that you have to get involved today. I would hope that you see something very similar to what we saw with Netflix, right? Netflix gave us a couple days of accumulation before breaking out. Maybe SLB will do something similar, and then we could find a particular pattern, use that pattern, and then get involved. I don't really like buying the next day if it breaks out because your downside's so great. Sometimes you don't have a choice, but in this kind of market, I'd want to see it pull back first. Now, why Nvidia? I'm not crazy about this name long-term here because they are having some cuts to revenue, right? And we are seeing some problems with the consumer. But technically speaking, Here's that 2010 cross, and now you're down. Tried to get over, failed. Look where you're at again. What line are you constantly holding? You're right in here. You're right at this level, right? I think that's really important to note. Now look at where you're at. That 120 line. 108, cut, up, up, up. So watch this, but if you start working off this wick, and this is really an important concept, if you want to remember one important concept, when you have these kinds of patterns, which is basically a gravestone doji, which shows a reversal in trend, and you don't actually reverse, and you have a reversal pattern. In other words, you cut below that, right? So what you're doing is you're cutting below the gravestone, and then you're triggering. So everyone's like, they're sitting there going, yay, it's going to go, right? We're going to make so much money on the short side. Okay, we got everything lined up. We have our wedge that broke, everything, and then your hopes and dreams are smashed as it rallies. That type of move, they usually have follow through, because the people here that traded, they're going to go into Monday hoping that the market's going to come down. And we all know how many times we've hoped for a trade, and we all know how that turns out. So I'm not saying it's the prettiest, but I do think there's a trade there. I don't think it has the massive potential that like a Lam Research or an ASML can move right now, but there is a trade there in my opinion. Again, you just might want to just poke around and just kind of look at where you're at on a monthly chart. Again, we have plenty of time before these finish, but what if we get a doji here and then we just have to flip that 142.9, right? That might be something. So keep that in mind. Get in the habit of looking at weekly and monthly charts. It will save you a lot of money. AEHR. This is one we tried a couple times, didn't work out too well. Once or twice we made money with it. It's super, super thin. And that's the caveat I'm going to leave you with here. One, this name's all over social media, so that always bothers me because people will keep touting it, and that's just going to get retail, more and more retail in. I would not be buying this. What I would be looking for is some kind of pullback. Now, what we've been seeing and what we've been using, and it's been extremely helpful, is just go to the fib level and just use the 50 and see if you can pull back to that level. One thing I really want you to take away from today is if you're just looking at charts and you're just doing technical analysis right now, you're getting picked apart because you don't understand the nuances that are moving the market. I'm going to go through this a little bit at the end of this video so you can watch some of it. But there are three pillars to successful trading. Okay? There is fundamental analysis, macro analysis, and technical analysis. 2 years ago, all you had to do is be able to look at a chart and read it. That's not the game right now. Okay, and the game's constantly changing, adapt or die. It's very, very simple. And right now you need to be using all three pillars. It's a very difficult time, but it's a great time to learn. And those that learn right now are going to be killing it in the future because of the skill set they build today. So keep that in mind. My point in this is if you looked at this the other day, nobody is cheerleading their position on social media. They're all sitting there, they're pretending that they didn't post it, and right. Meanwhile, it took out a high and then it pulls back. Then you come into today and now it's out, and now you'll see everyone talking about how they kept talking about it the whole time, right? The point I'm getting at here is the reason this is up is the bond market, right? It's up because certain stocks are moving, right? Yes, they had good earnings. Yes, it's been going up since then. But why this sector and why today? Small caps move the most when the bond market gets tighter. And we may be getting tighter in the bond market. We're going to talk about that right now. So I have several different charts that I run, and I have a lot of proprietary indicators that I've created over about 2 decades of doing this stuff. But what I want to point out is this is basically, to me, where you could bounce to. Now, are you going to get there today? I have no idea. You see how far off you are from your 10? When was the last time you were this far off? Now, if you're taking a look at this and you're seeing where you're at and you realize the 20-year treasury is about 20 basis points away from the 10-year, okay? That's all you're being paid for going out that far. What does that mean? Well, that means you're going to start seeing buyers because when the tail flips, it flips on the end. Think of it like a long tail, right? The long tail flips on the end first. It does not flip in the middle. If you ever think about it from that perspective, right? The wild swings are on the end of the tail. So now I have this doji, I have this huge buying bar. Why do I have this huge buying bar? Because people are out there buying treasuries. Here was another one, okay? Didn't work out. So we know we have to watch this, but this doesn't get any cleaner. I mean, it does not get any cleaner. So if you take out that low, you just get out of the way and then you wait for it to set up again. You know, when you're trying to pick things off at a bottom and watch this kind of thing, you're basically threading a needle. But the point is that if you take a look at your 10-year today, this was a perfect setup. Look at how you came up and then you just bought it all day long. That's telling you that this is going to wind up doing the same exact thing. Even if I reverted to the mean, which is your 20 is the mean. Okay, even if you reverted to there, you're looking at 7-8 points off this bottom. And that gets you up and in, and then you could stay in it and see how it progresses. This is more a long-term play, but I like it. Now, how you're going to have to look at, but you have to understand that earnings are coming out. It's very rare that you're going to see Halliburton have bad numbers after Schlumberger had good numbers. It's very rare. They correlate very highly together. So what you want to see is you want to see how you're acting. I like that you're above the 200. I think you're going to see a lot of action on Monday solely because you're seeing how Schlumberger performed and people are going to be looking for the next one. I think that this could continue to move and I think you could have a good day with it. Just a reminder, again, going into this, that you're looking at this coming out on the 25th with earnings. So you have very little time to get up and in before then. Keep that in mind. Now, let's talk about the indexes and then I'll go into our last idea. You can see very, very clearly here a couple things before we even begin. You're holding that 10, you're holding that 21. When was the last time that we started to see this? Let's put in the 5 so you can see all of this. Now you have a 5, a 10, and a 21 cross, right? So now you're starting to see a story come together, right? We have the line pointing up. We have the 10 going sideways. We're starting to see a curl here. Do we know if it's a bottom or not? You're not going to know. No one's going to ring a bell. It's not going to happen. But here is what's interesting. You see how stochastics is up here and it's higher than here? Okay, that is a positive divergence. See how stochastics is higher here and it's not higher here, right? That is a positive divergence. What could possibly drive this? Now, the way that the market works below is the 10-year, okay? And let's just look at this before I even get into my spiel. See this line right here? That is the beginning of the year. Now, what has happened all year long? You see it? Okay, you see how it's down here? As the bond market is selling off, this is yield. So as yield goes higher, that means they're selling bonds, right? As yield goes higher and they sell bonds, they are selling assets as well. The moment that this stops going down, okay, the moment that this stops going down, people are going to be able to buy bonds, right? By going down, obviously meaning the yield's not going higher. They're going to be able to buy bonds. When they buy bonds, they are going to then be able to offset their equity risk. That's the trade. That is the trade that everyone does. You'll be seeing people talk about this 60-40 portfolio split. The problem is they can't hedge their risk with bonds right now. And if they can't hedge their risk, they're not going to buy equities. But you can see very clearly that since this all started, so the moment that the bond market flips, you can use this as a guide for what's going to happen going forward, right? If the bond market starts to sell down, meaning yield sells down, they are buying bonds. They're going to buy bonds. They're going to buy equity. At the same time, there is a nuance going on, and pay attention to this nuance. You're seeing the market come down, but you're not seeing it come down a lot. Why? They're still buying puts. So what they're doing is, even though they are going out there buying bonds, right, which they bought today, buying the equity market, which they did today, they are still buying puts. So this is not imploding. They don't trust it yet. And that's actually good because when they unwind those, it actually makes the market go a little higher. And that leaves us to our last idea. If you're looking at this market and you're really unsure on what you want to do, this is SPXL. It is the 3X bull fund. This is really simple. Here's a little flag. You can see the flag right here. You could see where you'd break out of the flag and you could see how you would be able to push there. This is going to move essentially the same exact way as our S&P. And what you can do is just watch it very closely. When was the last time we were above the 20-day moving average? Has not happened since that famous Jackson Hole speech, okay? This is exactly what I'm talking about. If you're not looking at the macro picture and you're not understanding how the bond market is moving equities, you're too busy looking at a chart, right? And just looking at the technical analysis, and you don't understand that AEHR went down because of the bond market. It had nothing to do with the stock, right? If you don't understand that, you're at a disadvantage. Fundamental analysis, macro analysis, technical analysis. So here you are you're going across, you're forming a flag, you're stopping right there. Now you just break out and push. Where could we get to? There's a couple different ways to look at this. Now, look at your level. You're breaking. So if you're going to break that level, being super technical, you have the ability to get to here as a target. Does it do that? I don't have a clue. Anyone that tells you they do have a clue, stop listening to. But I would put that on my list if I was concerned about and I didn't know what to buy, right? What you're trying to do is you're trying to thread a needle when you're buying things that are at bottoms. Sometimes it's going to work, okay? And sometimes it's not going to work. I bought this at 88. I traded it up. I got up to 91. Then it reversed back down. I still have half the position, right? When you're buying at the bottom, you're trying to thread a needle. Do not expect a high win rate, but the returns are staggering if you catch it. And that's why it's worth the risk. Take a look at the Qs. So this was something that I've been hammering in the trading community for some time. I think they're sick of seeing the chart. But you can see the 20, you can see the 10. And why is that important? Well, when was the last time you were above the 20? Since that famous Jackson Hole speech when Powell decided to kill the market in 8 minutes. And now you flip above this. Now look at where you're at. Well, you haven't closed this high in almost 3 weeks. Okay, so that's a pretty big move for us. But okay, let's take that out for a second and look at what happened yesterday. So we've been watching this trend line very, very closely. Okay, when it traded up, we knew it was there. We stayed away, watched it come down. Using technical analysis, but we're also watching the bond market. We're watching the dollar, which I will get into in another video. And what we're waiting for is we're waiting for it to push and break. So when it rallied up yesterday and got to this level, we just go out there and put a little alert saying, hey, this is one of our key levels. We just want to make sure that it gets through before we continue to add. If you want to trim or short, this is pretty much your area. That worked out great. Now, if you were coming into today and you didn't understand the macro picture, there's no way in the world you're going to look at that, watch this open and this undercut and go, you know what I need to do? I need to buy stocks. You're not going to think that. If you were watching the bond market and how the bond market was being bought up on the 10-year, then you're going to look at this and go, well, that's interesting. They're buying bonds, right? Maybe I'll get involved, which is what we did. We put on a ton of longs this morning, okay? Even some shorts, quite frankly. I was short some of the social media and DRV. But we knew to put longs on, right? Because of our position and what was going on out there. And that allowed us to make money on several trades. And what we were doing, high beta trades. Okay? And that's what you want to focus on. They're going to go after high beta. They're going to want high beta. They're going to want Tesla. They're not going to care about Elon selling or not selling. EBITDA is through the roof. Anything that has EBITDA, like huge growth of EBITDA right now, okay, that has that potential, like a Netflix, they are the names that are going to be bought. This was a little bit more like a lesson on what you should look for. Please comment on it if it was too much, if you're just like, hey, just give me the ideas. But if you like the commentary, let me know. I'm thinking of doing more commentary, maybe even having guests. So let me know what you think about that. Please like the video. It helps me greatly with the algorithm. If you are interested in the trading community, to preview it is here. And after this weekend or after this video, which will be airing tomorrow, we're just going to do a wait list for the room. It'll be closed for the rest of the year. So that is it. Trade to win.